So the US Fed has begun its easing cycle, returning monetary policy towards neutral levels. The FOMC has reduced rates by a much larger than expected rate cut, and we are looking at 50 basis points to bring Fed funds rates to 4.75 to 5% range. Now, while the dot plot projections point to 2 more 25 basis points cuts this year, markets are still pricing in much more, almost 70 basis points of rate cuts. So again, it'll be a push and pull of what the Federal Reserve is expecting, what markets are expecting, and ultimately what the data looks like. We have unemployment rates moving higher, inflation coming off, but the growth trajectory in the US still looks pretty decent. Our view remains that the FOMC will continue to lower the Fed funds rate in upcoming meetings by reducing rates by 25 basis points consecutively at each meeting until the Fed funds rate is at 3.25% to 3.5%. Now that is a total of 200 basis points of rate cuts in total. Now, of course, this comes at a time when other central banks all over the world have embarked on an easing cycle. But again, it's not going to be a synchronous easing cycle globally. The pace and the magnitude of rate cuts will depend on how the growth, inflation, and labor market trajectory looks over the coming quarters.